How did I make $106 trading SPY call options? So on 12/17, I bought one call option around 14.05. So looking at SPY on 12/17 at 14.05, which is this candle right here. Basically, during the day, SPY was having trouble, and basically, this candle specifically that I got in got rejected by the 9-day moving average, and to me that meant that there was going to be more movement towards the downside during the day. And so what I did was I bought a single call option around like this little small support around 601.50. And so basically I bought a singular call option that day, 12/17, right? And then at 10:55 the next day, right? Wait, is it? Oh yeah, okay. So at 10:55, no, is it this one or is it this one? Hold on. Oh, sorry, I meant this one. So this candle right here specifically, the 11 candle, is where I sold out the position, and when I sold out the position, that is how I made $106 trading, one singular SPY call option. And basically, the strategy that I've been, talking about lately is that I basically try to trade SPY when it's having like very horrible days, right? And basically the gist of trading SPY is to be on the lookout when SPY is down, right? And then I want you to pay attention to the trade right here, right, where it says $106, right? And then next to it says 12.73%, right? Basically the strategy that I came up with is that basically you have to have I guess you could say like a specific percentage target that you want to achieve. And basically I guess the times that I've traded SPY recently, I've always aimed to achieve a 10 or basically I try to achieve a 10% gain maximum of when I trade SPY, and that has happened a lot lately. There is another trade I will talk about tomorrow, and basically it was a little bit it was a big win, basically, honestly. And so I'm kind of happy where this I guess you could say where this not challenge, but I guess I'm kind of happy where this strategy is going, where it's heading to, in a way, because I don't know, I just feel like it's kind of strange that the strategy is working like 100% of the times. Could it work always? Not really. The stock market doesn't have to work your way all the times. And basically, when you trade, any other stock, right? Whether it be options or stocks, right? Or cryptocurrency, right? Basically, what I like to do is I like to, reach. I basically want to make a 10% gain in that stock, option, or cryptocurrency that I'm trading in. And basically, I pay attention to the percentage that the position is up by. So I don't care what, right here, right? It says $106. I don't care if I'm up $106, $5,000, $10,000, right? The only thing I'm paying attention to is the percentage by how much I'm up, right? Where is my percentage at right now? Is it up 10%? Is it up 20%? Is it up 30%? And etc., right? What's the the goal that I want to reach for, right? And basically, like I've said, right, I've traded SPY a couple days, right? And I personally feel like trading SPY when it's having like its horrible days, right, is I guess a pretty good strategy, because you basically what I've been doing, right, is that first I buy a SPY call option that expires within 30 days or more, right? And then the next step is to slowly dollar cost average, right? So let's say, for example, right, let's say I bought a call option here, right, as soon as at the 11:30 candle, right? Let's say I bought a single call option here at the 11:30 candle, and I bought it as soon as it landed on the 50-day moving average, right? So now for me during the day, right, I'm just gonna wait and patiently see if SPY, my SPY call option can reach a maximum gain of 5 or 10%. If that does happen, I sell out the position. I rinse and repeat the cycle over and over again. And basically this is how it goes, right? Basically I bought a singular call option here as soon as it landed on the 50-day moving average, right? And then let's say during the day it just like SPY decides to go down crazy, right? He decides to go down crazy, right? And basically what will happen is that basically this percentage, right, let's say when I had bought at the 50-day moving average, right, let's say the position during the day, because it bounced off the 50-day moving average, as you can see, right? That 11:30 candle bounced off the 50-day moving average, right? And possibly my position was up, I don't know, maybe it was up 5 or 7%, right? So it was not still close to that 10%. It wasn't close to that 10% target. And so basically what I did during the day was like, okay, I'm just gonna wait and see if SPY can go down a lot more further, right? And that did happen. So my position was up at 1.7%. And then all of a sudden now it's down with these like red candles, right, showing up here. It probably brought my position down to, I don't know, maybe 30, 40%, 50%, right? So with that in mind, right, you will see that they'll show you right here, right, where it says $106. It'll show you how much you're down, right? But what you want to pay attention to is the percentage. By how much are you down, right? What's your percentage currently at? And so basically what I did, right, or for example what I do, right, is basically I try to buy SPY once it's down 10%. And then I buy SPY once it's down 10%, and then I wait a little bit more and see if SPY will go down further, right? I wait. Once it reaches 15%, I buy another call option, right? And then let's say SPY decides to go down more, right? I wait for SPY to go down to, I don't know, I guess you could say 20%, and then I buy another call option and buy once the position is down 20%. And basically when I do that, it basically lowers my average. So instead of being down 20%, I'll be down now 18% or 17%. And then let's say SPY all of a sudden, right, let's say you bought a call option all the way here at 583, right? And let's say you sell out your position, right, all the way here at 595. You're basically in the green now, because basically what you did during your trade was dollar cost average, but with options. And basically you're paying attention to the percentage of your position, of what, like, by how much down your I guess I want to say you want to pay close attention to how much you're down and look at your percentage, and then use that to your advantage and be like, okay, do I think SPY will go down more, right? Or will it start going up, right? You basically want to use the moving averages as your indicator, right? So for example, right, you see here, right, on 12/20, SPY finally crossed over the 20-day moving average. Then this candle finally right here, the 1030 candle, broke above the 50-day moving average, right? And basically ever since that, right, it's just been riding above the 9-day moving average. And from what I've seen is that when you use the 9-day moving average, basically what happens is that it will ride that momentum towards the upside. And basically what the 9-day moving average is basically an indicator for the short term, and it's basically used more for like day trading in a way. And so I've used that to my advantage. And basically you can see that if you sold out at 594, your position would have been in the green, and you would have made a lot of money trading SPY. And so I guess that's what the strategy is. I'm pretty sure, hopefully you understood it. I mean, I know I'm not really good at explaining things, but I try to explain the strategy in a way. I'll keep explaining this strategy because it is a test trial that I'm doing currently. So and I think that's pretty much it for today. That's really it. So that's pretty much it. I'll see you guys in the next video, and as always, take care and bye.